This is Make Money Count, brought to you by Cannect Home Financing.
What's up? What's up, Ian?
You're looking very cool. And also, he's back with a decade in customer service, sales in various fields. Principal broker of Cannect, Justin Turner, is back, and you've been replaced by your co-host, or you're sitting with your co-host actually this week. So
it's actually our new principal broker.
You know what? The dummy stays.
Yeah,
and
well,
the clown's going to be here for the show too.
Justin had some pretty big shoes to fill, so it's okay. One more. I guess that's no small feat. So anyway, there's a point where we really desperately need to start streaming the Sunday radio show live, because there's so much happening right now that it's just incredible. including you know what? Every so often we'll do the show and Marcus's chair is empty, and I'll say, "Where are you?" And he's on the coast of France, or he's in Italy or somewhere. And today he's actually in studio, except I can only imagine above you somewhere there must be a sun lamp, because you look pretty relaxed, my friend.
I feel like I'm in France right now. I feel like I'm in the south of France. You know what?
I'll
have a little more rosé
in your Connect mug.
Yeah.
How are those mug supplies holding up?
You know what? We only have 12,000 left.
They're dwindling fast.
Yeah, we only have 12,000 mugs left.
Did you guys figure out, just to let the listeners in, a couple of weeks ago, we offered up Connect umbrellas and mugs, and then the logistical department at Connect realized that that's a very interesting looking box that needs to be created to ship these things out in. So I assume you got that part.
I'll tell you something. The thing about the people at Connect is they're so used to dealing with me coming up with some idea and having to adapt around it, that there's very little complaining about it. It was kind of just a challenge. We ended up with all these boxes. Mm-hmm. And now it's like I think what we're going to do going forward is we're going to get a better, kind of swag bag for the show. Maybe we'll throw in some cool sunglasses. I don't know. We're going to put together a really good swag bag. And if you subscribe to our YouTube channel and send us an email, we're going to send you a kick ass. Am I allowed to say that?
No.
Kick ass swag bag?
Sure.
Oh,
yeah. I mean, it's who's listening?
Nice.
We did get we got a ton of emails though. And very nice things to be said. And we really appreciate it. A lot of them saying that I was way cooler than Marcus. So, to all of those who
did that make you feel good saying that? Yeah. Did that make you feel good? Just
to
now?
all those that supported me.
You'll notice that the send button on his mom's keyboard now has no letters on it, though.
Honestly,
with it, no S. So.
To hear that from you is it's a little bit, mean.
I'm sorry.
Yeah. I mean, who you should be saying sorry to?
Yeah.
Is Kelsey's friend who's staying with you because you're peeing with the door open.
What?
Justin's fiance has one of her childhood friends staying with them right now, and Justin's peeing with the door open.
The opinions expressed in this program are not necessarily the.
Anyways,
that is 100% correct. But we're like brother, sister. That's the thing, right?
Brother, sister. All right.
Who's like the sister? Who's more like the sister?
No comment.
Is that just because you pee sitting down? I gotta ask.
Yeah,
you should not.
It's more comfortable, honestly. Look, it's more comfortable. Let's all just,
Hey, listen, hang on a second. I'm not gonna beat up on peeing sitting down, because in the middle of the night, when you have to go to the toilet, you don't want to turn the lights on.
No.
You want to be controlled.
It's the only way.
One of the things I get emails about is this show, and it's really interesting that the feedback on it that I get is that one of the reasons people enjoy it is because you two do not come anywhere close to what people's idea of people who work in the industry you're in would appear as. And I don't mean that only because there's a clown sitting on the left-hand side of the screen for people watching at home. Have you named it, by the way?
We should. Ian, do you want to do the honors?
Oh, yeah. Yeah.
I thought his name was Justin.
There we go.
What's the you don't have to tell us right now. You can think about it, and then after the first commercial break, you can let us know what the name is.
That's a great idea.
Yeah. We'll do an unveiling.
But I'll tell
Justin,
you the reason why, Ian, like we are the way we are, is that it's pretty easy. Like if you're not going to enjoy what you're doing, you're never going to want to do it.
Yeah.
So like
That's
we kind of
a great
made the
point.
decision that if we're going to do a radio show and a TV show and a podcast, we are not going to be stiffs. We're going to be exactly as we are normally. Like we're talking about the same stuff we would be talking about if we were sitting here normally. We'll just pepper it in with some interest rate stuff and some honest opinions on how people should be dealing with their mortgages and their investments. But we're really
just one quick question, Marcus, before we do get to the what we're actually here to talk about.
Yes.
And that is, have you noticed in the parking lot that when Justin gets out of his car, he's followed by 42 other people?
That's my fan club. It's my fan club. And actually,
the
correction.
clown car.
Correction. I actually run here. I ran here today in the rain. That's dedication.
With those shoes?
Not these shoes. I had different shoes on.
No, Ian, you got to come to this studio one time.
Yes.
We got a full gym in the back. We got showers.
That's the appeal for me. What is a gym?
Okay, we got tequila.
What is this gym of which
There's
you
a
speak?
great red wine collection.
There is.
See, there you go.
Yeah.
Food?
It's a good time here.
Food. Yeah. Food. Always.
Food done. I'm in.
Yeah.
I'm in. Hey guys, text message. How do I get the best mortgage rate? That cannot be simpler, and yet what a great question to start things off.
Oh, I love it. Listen, information, we always talk about this. Being informed is the number one tool. It's like if there was a list of tips and tricks on how to get the best mortgage rate, number one would be get some information. And you can get information in a whole host of ways, right? Like you can go online and get kind of rudimentary information. And if you're relatively well-versed at mortgages, you're going to be able to understand which rate corresponds to you. But if you aren't, rates can be a little bit confusing because there are essentially 4 different rate types, right? Like there's a fixed rate and a variable rate. But within a fixed rate, you can have an insured rate or an uninsured rate. An uninsured rate means that your mortgage is not being insured by either CMHC or one of the other mortgage insurers in Canada. If your mortgage is not insured, typically there's a 10 to 15 basis point premium on that rate. If it is an insured rate, that means that typically you're doing a purchase and you got less than 20% to put down. You're going to get a better interest rate than an uninsured rate. So the one kind of common thing we notice when people shop for interest rates is, the mortgage business is still a business, right? So when people put interest rates on their websites, they're going to put the insured variable rate because it looks so sexy, right? Like 85, 90 basis points, less than 1% on your mortgage. But what the consumers need to understand is when you call in or when you're trying to get that interest rate, there are a lot of those rates that come with a lot of weird conditions, like weird penalties. Some of them, you can't break the mortgage unless you sell your property. Others, you have to be careful who you're getting the variable rate with, because a variable rate is like a bit of a marriage, right? When you get a variable rate with an institution, you have to rely on that institution to be able to lock you into a fixed rate if you want to at some point in the future. So how to get the best mortgage information, how to get the best information if you are relatively sophisticated and you can discern between insured and uninsured and various conditions that are applied on different mortgages, start your search online. But hands down, go to a mortgage broker, find one that's unbiased. I mean, listen, I'd love it to be Cannect. I always say this, like, it'd be amazing if it was Cannect, but just like a mortgage broker, right? Like, let's just set that up. Call a couple mortgage brokers. There's so many good ones. Call a couple mortgage brokers, find one that you're comfortable with, that you're comfortable chatting with, and that you believe is giving you good, sound, unbiased mortgage advice, and then rock and roll. And part of that process, we talk about this too, part of that process, if you're in a mortgage right now, call a mortgage broker up and then call your existing lender or have the mortgage broker call your existing lender because they're not going to want to lose your mortgage.
Mm-hmm.
It does tie into a question that Mary sent in as a text question, exactly that. Hey guys, why does home insurance cost more if you have a mortgage on it? Is there a set formula for how much extra the annual home insurance costs because of the mortgage? So, I mean, obviously people are realizing that.
Yeah, there's a very, I think she's talking about
referring to
homeowners insurance, like, insuring against your house burning down. So like, homeowners insurance, there's a specific equation, which I have no clue what it is.
Yeah.
But I can tell you that the larger the loan amount, the more you will have to purchase insurance for, because your insurance must be at least equal to the amount of the mortgage on your property. And then if you're getting a second mortgage or a home equity loan, you need to make sure that your homeowner's insurance is on board with that. Like we've seen instances where a borrower has a first and a second, and we're giving them a third to clean up some of their credit issues.
Mm-hmm. Mm.
And the homeowner's insurance will balk at it and they'll say, you know what? Not going to happen.
Yeah.
And we have to find them a new insurer.
Interesting question here, gentlemen. Do blow-up dolls cost so much because of inflation?
Oh, I like that.
For those who don't know what we're talking, I should have specified clown blow-up dolls just before this goes in a really bad direction. But as always, check out CHCH Saturday mornings at 8:30 for the visual track for this audio soundtrack that we present for you on Sunday afternoons here on News Talk 1010.
Ian, I was just thinking something. Do you know, you say it all the time. You know how you say the best mortgage now and forever? Like I like to say that too. You want to know why we say that?
Why do you say that?
It kind of goes with what we were just talking about, right? About how to find the best interest rate. Because if it's just the best mortgage right now, it could really suck, right? Like if it's just the best mortgage right now, you got to understand, like it could be the worst mortgage ever, and how bad it ends up becoming could mean that it was never the right mortgage anyways. Like imagine you got the best 5-year fixed rate mortgage, which happens all the time, right? Someone will call into the office. They'll be like, okay, on the Cannect website, your 5-year fixed rate says it's, I don't know. I honestly don't even really know what mortgage rates, but like, let's say it says 2.09 for a 5-year fix. Is that accurate?
Close. Yeah.
Okay. So, and then someone will call and be like, well, you know, I spoke to somebody at another brokerage and they're offering me 1.99. Now we know 100%, we know that the interest rate that we're offering on our 5-year fixed rate is something that doesn't have any weird conditions. We also know that like we do, like, you know, a lot of mortgages, like our volume levels with every single lender in Canada are at the highest levels that they could possibly be. So if there's a product out there with a really good interest rate on it, we've got it. But if there's a product out there that we're not advertising, there's a reason why we're not advertising it. You could end up with a 5-year fixed rate mortgage with a, let's say, $300,000 5-year fixed rate mortgage with some weird penalty on it. Like maybe one of those ones that you actually can't get out of the mortgage unless you sell the property. And you could have $1 million house with a $300,000 mortgage, and something might happen where you need $100,000. Guess what? You got to sell the property to break the mortgage. Or you could have a penalty that's based off of some draconian IRD calculation, and you could end up paying $50,000 to break a $300,000 mortgage. There are mortgages where in order to repay it, you've got to pay back all of the interest you were going to have to pay on the mortgage. So the best mortgage now and forever, I mean, it's like not tipping our hat to saying, we're going to look out for you well into the future. Like once you're our client, it works really well. It's really easy to explain if you're just talking about a variable rate mortgage, right? You get a variable rate mortgage, you need somebody to watch your back. You need someone to tell you, okay, listen, bond yields are really going to spike. 5-year fixed rates are going to jump up. We got to seriously consider locking this thing in. You need someone that's going to have that conversation with you. If you get a mortgage from a bank, you have to understand that the bank is not on your side. You've got a mortgage from your enemy now, right? Like you've gone to your enemy. You said, okay, listen, enemy, please give me an amount of money and then look after me to make sure I don't pay a lot of interest. Well, guess what? Your enemy, their only objective is to make sure you pay the most amount of interest. Anyways, your best mortgage now and forever. It's not just some bullshit line. It's the truth. Am I allowed to say bullshit?
Twice? 416-872-1010. 416-872-1010. You can also send us a text message at 71010. Dane is in Mississauga this afternoon. Dane, good afternoon. Welcome in.
Good afternoon, gentlemen. Currently just got a question.
Great, Dane.
Justin Marcus. Okay, so my question is, so this is a scenario. I have a mortgage with HomeTrust. I'm self-employed, don't show a lot of income. I like keeping my money for myself. My rate's around 4.2%, which I consider to be, considerably high. And I see all these ads for rates that are, below 2%, sub 2%. My balance is about $500K. And like I said, the income's around $50K. So I'm just calling because I'm frustrated that I keep speaking with people and telling them that I don't qualify, and they keep telling me that. So I thought I'd call in and see how you can help.
Lots of equity.
Yeah. No, for sure.
How are you going to help them, Justin?
I mean, we would obviously have to get the bigger picture, but there are a ton of different products that are available, whether it be net worth, there is products where we can gross up your self-employed income. There's a lot of things to unpack here, but there are definitely options. And I
think he hung up on you. Great.
Dane didn't like
Dane.
that. But specifically, what I think that I would do for Dane is there are products that we can go to 65% of the property's value. I don't remember the property's value, and we can gross up the income, 10 times usually, to help qualify. So that would be something that I would do for Dane. And listen, another thing, just for everybody who's listening, who is in a mortgage with HomeTrust, HomeTrust are another lender that has fully closed mortgages. So something that's not, put across properly when people get mortgages from HomeTrust is that they're generally fully closed. And you cannot break them unless you're getting in a better situation or you're selling your property. And a better situation means you're getting a mortgage from your bank. However, we have had a lot of success with bringing down our borrowers' interest rates with HomeTrust.
Yeah, that's a good one. You should mention that.
Yeah. So if you are with HomeTrust, whether you're coming up for renewal or you're midterm and they tell you cannot break, we will absolutely be able to, 99% of the time, we'll be able to beat the mortgage rate that you have with the same lender and lock you into that rate for another whatever amount of term that we.
There's a certain amount of credibility that comes with doing hundreds of millions of dollars of mortgages, right?
Mm-hmm.
So if we go to HomeTrust on your behalf and we say, listen, we got this guy named Dane who we're going to move to another lender for a lower interest rate. The other thing you got to understand is when you see this hunger in the market for yield, right? Like everyone's clamoring to increase, to get a yield. So there's a lot of money chasing the mortgage market right now. So if you're self-employed, a deal that had a little bit of hair in the past is now almost coveted for the equity position. So that 419 he got a year or two ago,
mm-hmm.
even though interest rates might have been lower then, there's more money flowing into the mortgage market. And there's other lenders like Community Trust or First National on their Excalibur program. There's other lenders out there that want your business if you've got equity.
Mm-hmm.
So, and then the other thing I would say is, you're self-employed. It's not the end of the world, right? Self-employed, bad credit. Typically these people are super, super underserved by their banks.
Mm-hmm.
But just with a little bit of tweaking, we get you back in with those banks, right? That's the other thing about that tagline, right? Best mortgage now and forever. Best mortgage for Dane now, it might not be a 5-year fixed rate at, 2.09%. He might not be able to get that.
Mm-hmm.
But the best mortgage now for him is one that we can get him there with,
mm-hmm.
right? Something that we can coach him over the next year, let's say, on a self-employed to 65%. You get them self-employed to 65%, beat the 419, probably get that down to what? 319 right now on one of those products. Maybe at least shave a point off.
Mm-hmm.
And then as you have him for 1 year, like when you're a client at Cannect, we're chatting with you once a month typically, especially if we're trying to move you to lower cost capital. And those phone conversations are, hey, you need to have X amount of money being deposited into your bank account each month in order to hit a certain average to show your new lender that you're going to qualify for your new mortgage.
Mm-hmm.
There's all these little tricks. Like all we do is make the lender's policies transparent to the borrower. You would think that the lenders would want to have them transparent, but for some reason, they do not.
Hey, look, we have calls, 416-872-1010. Al is in Richmond Hill. Al, good afternoon. Welcome in. What's your question?
Hey, I got kind of a weird situation. So I'm a renter right now. I'd be a first-time buyer of a house. I have a pretty sizable amount available to me for a down payment. The problem is I can't really, I earn cash. I can't really declare any income. I guess I'm self-employed. I work in the nighttime, the nightclub industry, the hosting industry. So my credit's really good. I have a pretty large limit on my credit cards and stuff, but none of the banks, none of the lenders I talk to want anything to do with me, but I can put, 40, 50, maybe even 60% down payment. So I don't know what to do. The only other thing I've been suggested is to kind of get a personal loan from an individual and then use that. But I don't know. Do you guys have any advice?
I mean, first off, very, very common situation.
Mm-hmm. Absolutely.
So
yeah, not strange.
Yeah. This is what I would say. The money's got to be in an account. The money has to be accounted for if you want to use it to prove that it's going to be your down payment. So you want to kind of get it into a bank account or an investment of some kind, because when it comes time to get qualified for a mortgage, your lender is going to ask you, there's three main things that a lender wants to see: equity, income, and credit. When you're purchasing a property, equity comes in the form of your down payment. So the only kind of way around that is you find someone that's willing to charge you more for a mortgage because they're not going to look at equity, income, or credit. This is we'd have to look at your situation, right? You got to weigh kind of your options, but having equity is the price of admission. You get a mortgage no matter what credit and income look like, as long as you have equity. Everything is forgiven with equity. It's just, having credit and income to shore up that application mean you're going to get a great interest rate.
I will say too that if you're in a situation, I speak to a lot of clients and they say, well, I make cash, but if your cash goes into your bank account, then we can use that as income to qualify you for your mortgage. So that's not something that the bank is going to offer you. That's something that we get from what we call an alternative lender or a B lender. But we can use that money that you're making to purchase a property to use as income, basically. And the other thing is, if you don't put the cash in your account now, but that is income, then, we can coach you on how to show that properly. It is your income. If you put it in your bank account, then we can use it. That's basically, what it boils down to. And something interesting that I was going to mention before the break, these alternative and these B mortgage lenders are getting a lot more aggressive when it comes to interest rate. So just like a funny thing. So Scotia Bank's new sticker price, I would call it. So their unmarketed 5-year fixed that you get if you just apply is 2.94%. And Community Trust, which is a B lender that we use a lot, their new mortgage rate is 2.94 with Scotia and 2.59 for a B lender. So these B lenders are getting very aggressive.
There's more money coming into that marketplace.
Yeah, exactly.
More money chasing good deals.
Yeah.
You got equity. It's the price of admission, right?
Yeah.
Listen, you're putting 40% down on a property. It's Al. Is your name Al? Did we lose him? Okay. So you're putting 40% down. That's a GIC level risk.
Yeah.
Where are you going to put your money? Right? Like 40% down. You know what has to happen to the city of Toronto's real estate prices in order for them to drop 20? Like what has to happen in the city of Toronto for prices to drop by 40%? I don't know.
Doesn't exist.
The pandemic didn't do it.
Yeah.
You know, like I used to say, like it would take a nuclear bomb, right? Like we just had a pandemic and prices went up.
Yeah.
If we had a nuclear bomb, they probably double.
Yeah, it's crazy, and it's getting busier and busier. We're trying to come up with a name for Justin's blow up clone doll. How about Aaron? Aaron. Rebecca is in Toronto. Rebecca, good afternoon. What's your question?
Hey guys, thanks for taking my call. So here's my situation. Things have been tough for me and my husband since the start of COVID. We managed to rack up about, I think we're almost at $100,000 in debt. So my husband works in sales and he has gone back to work. But when we went to the banks, they said since he didn't have a good year last year, there's not really anything they can do for us, even though we have a house that's worth, in my opinion, about $1.5 million with only a $400,000 mortgage on it. I've actually never spoken with a broker, but you guys were suggested to me. I was just hoping you guys had any options for me or something that you would suggest to do.
Definitely.
Slam dunk.
Yeah. So again, it's this kind of the same with Al, right? So when you go to the bank and they say they have no options for you, what they should really say is go speak to a broker.
Yeah.
Because we can't help you, but the brokers can, right? So same thing. I think you said that he was in sales. And as long as we can show, again, same with Al, as long as we can show his income for the last 6 months, as long as he's been working for the last 6 months, then it's not a problem. We can get you approved. You know what I mean? And like I said, the rate that we're going to get you approved at is less of that than that.
Dude, with that
sticker
much
price
equity, like you're not going to need to show much income at all. You might not even need, like the income requirement on a deal like that will be very low, the very low threshold. So, I mean, the sucky part about this whole business is that when you first went into the bank during COVID, because you trust your bank and you watch their commercials and you think that they're there to help you, the sucky part is you go there, your bank knows that you've got like $1 million worth of equity in that house. She probably has a collateral charge on the house, which means they registered the mortgage for at least the value of the home, if not more. And instead of saying, yeah, we'll top up your existing 5-year mortgage or whatever, add a line of credit, they're giving her unsecured credit, which will impact the credit score. Like, it's just such a, honestly, like I get it. It's a moneymaker. I get it. But like, you're going to end up with people like Rebecca who are now calling a mortgage broker, and like, lucky you, Rebecca, you basically called the best mortgage brokerage, not basically like rated #1 best independent brokerage in all of Canada. So like, jackpot for you.
I want to get to the calls because we do have a bunch coming in. By the way, if I am not here next week, I just want to give founder, CEO of Connect Markets, Ferris, principal broker, Justin Turner, the heads up. If I am not here next week, it's probably because I spent the last half hour on the Bell Media VPN looking up good names for blow-up dolls. So that might have something to do with it. Carolyn is in Stouffville. Carolyn, good afternoon. Welcome in.
Hi, good afternoon.
Hi.
I was just listening to the show, and I heard something about that the unsecured line of credit is differently scored on your credit, on like your credit report versus the secured one. Can you explain that?
So I think that, so absolutely. It was more of the unsecured line of credit is going to affect if you're looking to wrap up your debts, then getting an unsecured line of credit is not the answer, because it does show negatively on your credit report to a certain extent, because it would show as a line of credit that you have maxed out. what we were kind of saying is that, if you're looking to wrap up your debts, wrapping them in with your mortgage is usually the best course of action and the best way to go about it.
Anytime you've got a credit line that's max utilized, so even if it is the credit line attached to your mortgage, your home equity line of credit, if it's fully maxed, it drags your credit score down. If it's unsecured and it's fully maxed, it drags your credit score down. The idea is to pull it off of the credit bureau. If you've got a debt that you know is going to stick around for a little while, pull it off the credit report. Your credit score will boost up right away. And then the other piece of this that we were talking about is if you've got a mortgage with one of the banks and that mortgage has a line of credit attached to it, even if it doesn't in many cases, your bank has registered in many cases what's called a collateralized mortgage charge. So you go in, you get a mortgage, let's say your house is worth $1 million, you get a mortgage for 500 because that's what you qualify for. They register the mortgage for $1 million. That prevents you from getting, in many cases, I mean, with Cannect, we've got workarounds. We can still get you a second mortgage or a home equity loan, regardless of whether it's a collateralized mortgage charge or not. But in many cases, it shows as if all of your equity in that home is now pledged because you got $1 million mortgage and the value of your home is $1 million, even though you only received 500. And the banks do this so that they can more easily provide you with unsecured credit at higher interest rates. And then it's a kind of vicious process, right? Because you take the unsecured credit, you utilize it, then your credit score goes down, and then it's harder for you to qualify for the product that you really needed in the first place. It gets back to the best mortgage now and forever.
416-872-1010. Rob in Thornhill. Good afternoon. What's your question?
I got into a reverse mortgage with Home Equity Bank about 4 years ago, took it out for 5. I took 150, I owe about 200,000. I have $22,000 in unsecured credit at a lower rate than the home equity, so I'm lowering my cost of capital. Man. I have an Equifax credit score, I just did it, of 850. I have a cottage worth 500,000 paid off. House is probably worth about 1.2, but I only have income of about 35,000.
You should have never got a reverse mortgage. Never.
At the time, it was the only option.
You know what?
I thought I had.
Not a chance. You have other options. Like the 65% LTV on an asset program this guy should do. You get a 2% mortgage rate. That's just whoever advised you to get that reverse mortgage, FSRA should come and pluck their license right away from them.
I advised myself.
Well, then, you know what? You will
I'm an
not
idiot.
No, you're not. Honestly, you're not an idiot. But this problem is, we talk about this all the time. If you call one company for a solution, or if you think your solution is one thing, if you are playing amateur mortgage broker at home right now, and you're saying to yourself, well, my bank said no, so that means I'm screwed, and I better call like the worst option possible.
Yeah, that's your bank's fault.
Right. It's not your fault. It's your bank's fault. You trusted your bank for some information. Your bank said no to you. They didn't say to you, you have options. Speak to a mortgage broker.
No, you don't understand me. I didn't go to my bank. I just thought this is the only way out. I was 100,000 in debt, and I got to get out of debt. And before everything collapses, I'm going to take out this home equity.
Okay, so moving forward, Rob, you said it's up in a year, guys. Obviously, you can help them out.
I mean, what's the rate on that thing? 5-6%?
For sure.
Yeah, we got to pay that thing out.
It's about. I took out originally it was like 6.3. Took out 100,000. Then about 3 years ago, I took out another 50, and that was about a little 5.9. So it averaged down. It's averaged at 6.3 right now. Weighted average.
Point is, we're going to get it sorted out.
You know what would be great? Which we should do is you should take this file. You should make sure that he gets sorted out, and then next week, can you call in again next week? And next week we will share how amazing your new solution is with the radio show.
Yeah.
Because this is what we do all day long, right? This is it. People call us. They're like, oh my God, I so totally should have called you before. I totally made a mistake. And by the way, you're not an idiot. You know what the problem is? Debt's scary.
Yeah.
Like, getting in
100%.
debt is scary. And you, like, unfortunately, you had this feeling of dread and anxiety relating to a mounting amount of debt. But somebody should pacify you in that situation and say, you've got a cottage, you got millions of dollars worth of equity, at least $1 million worth of equity here. It's just a way of thinking about it that needs to change. Like, it shouldn't be scary. It shouldn't be something that seems insurmountable. If you speak to the right people, you're going to get course corrected and you're going to get the best mortgage now and
Forever.
yeah.
Forever. It's a good example, though, of what we talk about a lot, which is there's a lot of listers lying at home, wide awake, 2:00 in the morning, because, as you said, all they heard was no. They didn't hear no, but they just heard no, and that was it. And they're lying there terrified and very much like Rob could make some very poor financial decisions because of that.
Listen, if we were all characterized by the decisions that we made when we felt dread or anxiety,
Yeah.
we'd all be idiots. Right? Like, just like, I mean, this is not a like a mental health or psychology show, because I mean, both of us are definitely not eligible to be coaching anybody on these types of things. But
Well,
like, you know, it's okay. Like, finances are scary. It sucks dealing with stuff when you're stressed and anxious. So, like, let us help. Let us help. That's all we do.